Hello, everybody. This is Alan Elman, the Blue Collar Investor. I'm creating a short video regarding a trade that I executed on Monday, February 24th, and today is Thursday, February 27th, and it's after the market closes. And unfortunately, we had another rough day with the stock market. So what I want to show you in this brief video is the trade, why I selected the underlying security, in this case, Paycom, ticker PAYC. And it's a trade from 2/24, Monday, through March 21st, the end of the monthly contracts, 2025. So it's a 26-day trade. What I want to show you now is why I selected Paycom and the initial trade calculations and where we stand right now as I speak after the market closes on Thursday, February 27th. So the information that I'm about to give you came directly from the premium stock report that we provided to our premium members on Saturday evening. So at the time that I purchased the shares on Monday, Paycom was trading at 213.06, and it was on our stock list actually for the first time in a while. It had previously been on our list, but stocks can come on and off depending on their status at the time that the report was crafted. So welcome to Paycom. Now, we got this stock from the BCI database. Over the last 18 years, we've created a database of over 3,000 securities that we've identified as potential option candidates, and Paycom is one of those. So we always reevaluate that database each week, and then we run them through our screening process. This particular stock, Paycom, did make the list this week. Now, it does have a robust implied volatility of 30.5%, approximately double that of the S&P 500 as of Monday the 24th. It resides in the industry segment of software and is currently ranked A, or the top 20%. Now, the mean analyst rating is 2.8, which is above average and within our acceptable limits for our screening process. And it had a bullish on-balance volume. What that means is more cash was coming into the stock on up days than on down days. That's a bullish signal. The next earnings report was 5/14, and that's certainly outside the contract, which expires 3/21. Now, Paycom does give a dividend yield of 0.7%, and the ex-date was 3/10, which is actually within the contract. Now, if you absolutely didn't want to sell your Paycom shares early, then you should avoid that ex-date. For me, I don't care. Have my stock, have a nice life. That means that I've maxed my trade and I get the cash back early to then reinvest. So I don't mind it at all if my shares are exercised early. But for some people, retaining the shares may be important, in which case you should avoid the ex-date. Now, the $220 out of the money call strike, a reminder that Paycom was trading at 213.06 when I entered the trade on Monday, had a bid price of $3.90 per share. So we have the opportunity here for two potential income streams, one from the premium of $3.90 per share, and the other from share appreciation from 213.06 up to, but not beyond, the out of the money $220 call strike. So here are the initial calculations using the BCI trade management calculator, and the trade entry is located on the top row. You see 213.07, the 220 strike for 390. Now you also see 100 shares. I always use 100 when I'm making educational videos or writing articles. Just makes the calculations easier, but I use usually 3 to 7 contracts for each position. The percentiles are exactly the same. Okay, spreadsheet then tells us the following. 26-day trade if taken through expiration. In the brown cells, we see that the return is 1.83% based on a 26-day trade, annualizes out to 25.7%. If Paycom goes from the 213.07 purchase price up to the 220 strike price by expiration, we then will have generated an additional 3.25%. So there's an opportunity for well over a 5% 26-day return. Break-even price point, 209.17 in that yellow cell. So I'm just going to refer to my notes now because I just jotted them down. Paycom, like the whole stock market, had a rough day today on Thursday and was actually down $3.52 a share. However, prior to today, it actually had gone up significantly. So it closed Thursday, today, the 27th, at 216.35, which is $3.29 above the purchase price. It's also $7.18 above the break-even price point. So right now, even though we still have 28 days until expiration, I'm sorry, it's 22 days until contract expiration, the outcome is not known, but we're actually in a pretty decent position, being above the purchase price and way above the break-even price point. Of course, we always put our 20%, 10% guideline, buy to close, good till cancel limit orders in place. In this case, it was 20% of 390 or 78%. So that's it. A trade that I executed on Monday, where we are on Thursday after market closes, the reasons why I executed this trade, and the initial trade returns. Folks, I hope you enjoyed this video. I'll be making more of them to share with you trades that I've made. So I hope they're educational in value. They're not specific trade recommendations, but my gist and my goal is to give you rationale as to why you should execute a trade and some of the possibilities when you use some of these securities that come from our premium member stock list. So for right now, that's it. Thanks for watching. My name is Alan Ellman, the Blue Collar Investor. Take care, everybody.